Hello. Today we're going to talk about bank reconciliation. So, what is bank reconciliation? Basically, the bank reconciliation is a bridge between the balance per books and balance per bank statement. When those numbers don't tie, you need to figure out where the difference is. Possibility is that from company's side, company may have deposited some checks in the bank, which bank have not taken into account yet, or checks company may have issued have not come to the bank yet. On the other side, from bank's perspective, there could be some ACH debits or ACH credits which may or may not have been recorded in the books, and also there could be some uh, bank analysis charges or bank fees or bank interest which bank has recorded which may not have been in the books. So we need to reconcile those so that we know what the true bank balance is. Now, question is why it is so important to reconcile the bank. I think the main reason is that when you prepare your financials, you want to make sure that it shows kind of a true and fair view. And one of the way to find that out is to account for all the cash. So when you reconcile your bank, you know that all the cash has been accounted for. Also, you do not want to write any bad checks. So once you know what your balance is, then you can write checks accordingly. Also, you also want to avoid unnecessary NSF charges and some bank fees. So it is important that you reconcile your bank. Now, imagine this way. Just think for a second how this is going to work. So that might resonate with you well. That bank statement is a third party statement on which you have no control. You cannot change anything on that. So whatever you need to make a change would be into your book balance. So if you have deposited a check which has not shown up in the bank, means what? So let's say example that you have 100,000 book balance, which was after accounting for the deposit of $20,000 you have made, which has not come into the bank yet. In that case, what you have to do is you have to lower your book balance. In a similar sense, when you have cut the checks, you already have lowered your book balance. But if that those checks have not come into the bank yet, then you need to increase your book balance. In the similar sense, also that when there are ACH debits or bank charges, bank fees, etc., bank has charged and you have not reported, then you need to lower your book balance. Once you understand this, then I think it will be very easy for you to reconcile your bank. Just for FYI, some companies do have overdraft facilities with the bank, and in that case, bank may have a overdrawn balance. Even in the books, it may have a credit balance instead of a debit balance in the bank account. In that case, the signs will be changing. So think it this way: is that suppose you have an overdrawn balance in the books of $200,000, and that $200,000 came up after depositing that $20,000 check. Now, if that deposit has not come into the bank yet, which means you need to increase your book balance because it's overdrawn balance, that balance will be increased. More balance will be due, right, rather than the lower one. Similarly, in case the checks have not come to the bank yet, then you will have to decrease your overdrawn balance in the books. This is just more of a FYI. Since it's a part of bank reconciliation item, I need to kind of put it out here. I don't think this will be a part of your exam or anything like that. So, but it is good to know. So that's why I thought I should bring it up here. So, question is how you gonna reconcile the bank? So you need three things. First thing is that you need a bank reconciliation statement of the prior month, then a bank statement for the current month, and the detailed general ledger download of the current month. So let us see, for example, you are reconciling month of February. Then you would need a bank reconciliation statement as of January, a bank statement for February, and the detailed general ledger download for the month of February. So once that all you have, then we can start step-by-step process The first step is that you look at your opening bank reconciliation, which is for January, and then look for all those open items which were on that statement, and then look into your February bank statement and see that any of those items have come into the bank or not. If they have come, then mark R for reconciliation on the reconciliation statement as well as on the bank statement. And imagine that now, let's say, for example, there are 5 items open, 5 checks which had not come into the bank yet. But out of those 5 checks, only 3 checks have come. Then what are you going to do with other 2 checks? Well, those two other checks which have still not come into the bank, you're going to carry forward into the subsequent month's reconciliation statement. So in this case, those 2 checks, suppose they have not cleared, then you will put into your February reconciliation statement. So once that is done and all the items on the reconciliation item appearing on the January statement is taken care of, then you look at your general ledger download and look for any contra items. There could be a possibility that a check was written and later on it was voided. So, well, with check written was on one side of the on the withdrawal side of the book, while the voided check would be on the deposit side of the book. So you need to put this contra sign, C for contra, because understand this, that this check is never going to make it to the bank. And you keep on researching this item and what is this item kind of thing. But if you clear it as a contra item, then that reduces your work. You don't need to go extra mile to figure out what it is. So once those contras are taken care of, then you focus on your deposit side. So look at all the deposits appearing on your general ledger and tick mark those items, those who are appearing on your bank statement. So tick mark at both places in the general ledger as well as on the bank statement, so you know that these are being traced into bank statement. So once that is done, then any item which a general ledger shows as a deposit and which is not in the bank, then those items are considered as deposit in transit, and that those items you put it on your bank reconciliation statement. So once that is done, then you look at any other item uh, which may have as a deposit on bank statement. You do a research, and if it is not in the books, you also put that into your reconciliation statement. Once that is done, what you do is that whatever those items you have traced into the general ledger, so you make a total of all the deposits which were on your general ledger, which you have traced it into a bank statement, total those items. And of those, the total of all those items, if is equal to the total deposit shown on the bank statement, then you have some kind of assurance that yeah, everything is going well. You have all deposits have been accounted for. Once that is all done, then you repeat the same process for checks, right? Once that is done, then you look for any ACH, bank charges, bank interest, etc. Try to trace it into general ledger. If it is not on the general ledger, then for now you put it on the bank reconciliation statement. Once that is all done, you look one more time at your general ledger detail and see if any item is unmarked, right, or any item not been identified. And then if it is there, then put it on the reconciliation statement. Same way you look at your bank statement and any item not appearing anywhere, you put it into your bank reconciliation statement. Once that is all done, you total your bank reconciliation statement and see that everything is tying in and the difference is 0. If uh, there is some difference coming, then check your totals first. Look at all your formulas if they are right or not. And if there's still more a difference, then you go back into deposits, look again all those checks and all those ACH debits, etc., and find out where the difference is and fix it that way. So once that is done, what you need to do is that whatever items, remember those ACH debits or bank fees, interest rates, etc., what uh, interest payment, interest charges bank may have charged, If they are not in the books, then you need to record those in the books because those are the period costs and you need to record for that month. So record those entries in the books. Now, that is going to happen, what would it take to do is that uh, your bank balance is going to change, right? So then you update your bank balance on the bank reconciliation statement, and then you delete all those items which you already have posted into GL. Once that is done, then you have a clean, condensed bank reconciliation, which one would look for, and that's it. I mean, you don't need anything beyond that. Now, here is a sample general ledger. Note that this item here are all withdrawals. These are all deposits. See, all whatever is traced has been tick marked, right? So that is how this works. This next is bank statement. Now look at here, bank opening. This is opening balance is 0. These are the deposits, and these are the checks issued. Now here, deposit says 17,865.27,965, and they are here 17,865, 27,965, 112,450, 112,450. So all these deposits are there, right? Notice that only the last item at the bottom, see there's a no marking here. So 110,000 colored in green, that is basically you have to take it as a deposit in transit. So then what you do is that you total of all these items here, not 100 this at the bottom one, but the all other ones, and total those items. And if those item comes up to 633,541, then it means all your deposits are accounted for. You don't need to worry about that anymore, right? Same way in case of checks, see here the checks are 1101, 1102, etc. But then in here, there are two items missing here, 11 and 12, and three items missing here, 15, 16, and 17. So look at this statement here, and those items missing here are highlighted or colored in yellow. So those are the 5 items which will go into the reconciliation statement. So then what you do is that you take up all those, right, those checks which have cleared, and then total that up. And if all that total adds up to 139,000, then all your withdrawals, all your checks have been accounted properly. After that, you look at all these ACH and these other charges, and you see that it is not in the books anywhere. So what you need to do is that you need to add these all items into bank reconciliation statement for now, right? So here is the bank reconciliation statement. So it says bank balance per bank statement 492 198. So if you see here, it says ending balance 492 198. So that is what is tying in 492. Then you look at balance per books 389 803 is 389 803. So that is tying in. We talked about this 110,000 in transit. We also talk about these 5 checks in not cleared yet. So that is all here, and miscellaneous etc. charges. We took it all this in here. So that is that. So this total comes out to 492 198, which is tied to the bank statement balance, and difference is 0. So you're in good shape. So after this is all done, you save this and then post all these 3 items into the books. Once you post these items, then your book balance is gonna change. Then you put a new balance, take these items out of the reconciliation because they have been posted. So now you have a new total, which again will be the same 490 to 198, and the difference is 0. And that will be the perfect reconciliation one can look for. Now there is a school of thought where somebody would say that, well, that bank in transit, deposit in transit, we already have deposited those checks in the bank. We have a proof. Bank has acknowledged that they have those deposits with them. So we should not be making any changes into our book balance. We should only be changing our bank balance. Well, in that case, this is what happens. So deposit in transit, which is shown up here, 110,000, which in the previous case we had shown as part of the adjustment to balance per books. Well, here we are adjusting that bank statement balance. And now we have adjusted bank balance of 602,000. Well, basically what it is that we have moved the deposit from there to up here. Other than that, there is no other difference. So 602 and this 602 are looking the same thing and difference is still zero. So it doesn't matter where it is recorded. You don't need to argue with somebody who is right, who is wrong. Question is, this is how the company wants it, then this is how you do it. Now, question is, what if you don't have prior month's bank reconciliation statement? In that case, what you do is that first you find out what the opening balance for that month was. So let us say, for example, you're reconciling February bank reconciliation. Then you look at the balance per bank statement as of January 31st. And then you also take a balance as per books as of January 31st, which of course is the balance as of February 1, opening balance, right? Okay. So you take those balances and deduct one out of the other, and then now you have a difference. That difference, then what you do is you look at all your withdrawals in your deposits and try to figure out anything which pertain to prior month is appearing in this month. So on the bank statement, you can see that, like, for example, the checks we started in February, we started with number 1,201, 1,202, etc. And you have a banks, there are two items on the bank statement, which are numbered check number 1185 and 1192, which is pretty apparent that those checks were issued prior to February. So in that case, those items are related to your opening difference. So deduct those totals of those two checks out of that total difference, and now you have a net difference. As you reconcile your month of February, your reconciliation is not going to tie. There will be some difference. If that difference is exactly the same as you had for the beginning of the month, then February reconciliation is tying in. Okay, that's what it all means. Here is an example. Their opening bank balance was 185,000, book balance was 178, so difference is 7,000. And then checks to prior month cleared 2,000, so net difference now is $5,000. If in the month of February you still have $5,000 difference, then it means everything for February is right. You can reach out to me at sharpiemba@gmail.com. As you know, I have released a couple of videos before this. So if you like any of those, please press like button. Also, you can subscribe. You can share this with your friends and put the word out. Now, if they can benefit out of it, hey, that is the best thing one can do, right? Thank you for your time. Bye.